More on Apple. Let's bring in Fast Money friend Gene Munster, managing partner at Deepwater Asset Management. Gene, great to see you. You're all bulled up at the about the active installed base, record highs that keeps the flywheel going. So the Apple story continues. Does it justify this valuation? Does it justify a push higher?
I think it does, Melissa. And I think that gets lost in kind of this inline-ish quarter, because ultimately, if they continue to grow the number of active devices, that means that the revenue durability, the visibility continues to improve. And we've gone back and you've heard me talk about for the past year that I think that this should be viewed as a consumer staples company. Those multiples have come down, but they are surprisingly high relative to their growth rates. They tend to trade the big ones, Coke, Procter & Gamble, Clorox in the mid-20 multiple, and they tend to be a 1% type of growing business. In the case of Apple, I think we're going to return to a 5-ish% growth for the next couple of years. And ultimately, they have upside for other levers, whether it's related to Vision Pro or something in automotive, a lever that consumer staple companies just simply don't have. So put all that together, Melissa, I absolutely think that this should trade at a higher multiple. I think a sustainable multiple in the low 30s is respectable, and growing a user base in this macro environment is a difficult thing to do, and they do it quarter in, quarter out.
Services, as we said, now almost 25%, Gene, and it makes sense that operating margins are 30%. That actually, I mean, that's a reason, that justification enough for the higher multiple. But I guess my question is, where can it go to? Like, at a certain point, services is going to top out in terms of percentage of overall revenue.
What's going to continue to go higher, 16% growth, of course, in the September quarter. Overall business was down a little bit. So this is becoming a bigger part. It's just over 20% of total revenue. This could be a 30% plus part of their story. It's going to continue to gain share. I think that was a surprising number on the services. It's the best number since December of 21. And with the backdrop that this business is going to see a headwind from developer pushback around App Store fees and what's going on with Google. And so ultimately, this continues to keep powering higher. And I think it's, to answer your question, Guy, I think it's just going to keep going up. And it's 30% plus of total revenue.
How do you think about the services revenue durability in a recession? How immune is it?
It's been seeing an impact kind of earlier this year. We had growth of 8% in the June quarter. And again, this is the best number that we've seen since December 21. So we have seen a slowback. If you want to kind of zoom back a little bit and look at the duration of what's going on with the consumer. So it can be impacted. Services can be impacted. There was a little bit of a difficult comp over the past year because it was just so white hot over 2021, the services growth, as everybody was doing more stuff at home. So I think at the end of the day, the services business is growing at 10 to 15% and is remarkably durable when it comes to consumer softness. I think that's the whole my whole takeaway here is that this company is the fabric for those users. Can't live without it type of a product. And ultimately, those are just more opportunities for Apple to sell, to increase ASPs, and to do that in a profitable way. One last point here. The margins are remarkable. These are the highest margins that they've ever had in the midst of everything that's going on. I think that gets lost.